right. Good evening, everyone. Welcome to Scholars and Associates. Tonight, we'll be looking at IFRS 5, non-current assets held for sale and discontinued operations. Non-current assets held for sale and discontinued operations. All right. So now, what is IFRS 5 say? What is it about? So IFRS says that discontinued operation. So this is where we classify non-current assets as what's held for sale, right? So our non-current assets that we know from our basic knowledge in accounting, we know that the non-current asset is an asset that is used purposely for the production and rendering of what services. So we are using it for production of goods and what services and rendering of services. That is what we know for non-current assets. But there may be instances where we would have to classify an asset as held for sale. As what's held for sale. That is where we would try to sell the asset, right? So we have certain conditions that would warrant us to sell these assets. So before we would say that we are going to sell the assets, we need to stop using the asset, right? We need to stop using the asset, discontinue the operations of the asset. We are not going to use the asset anymore, right? Before we are going to say that, oh, now let's sell the asset. It is a non-current asset. It is not our normal ordinary course of business, the asset that we use or we sell in the ordinary course of business, which is the inventory, IAS2. This is the non-current asset where we use the assets in the production and rendering of what? Production of goods and rendering of services. So what is a discontinued operation? What is a discontinued operation? So I would say that a discontinued discontinued is how it's spelled. Let me see. A discontinued operation, what is it? A discontinued operation is a component. It's a component. It's a component of an entity. A component of an entity. It's a component of an entity that has been sold. That has been what? Sold. That has been sold. Or which is classified. Or which is classified. Or which is classified. Or which is classified as held for sale. As held for sale. Or which is classified as held for sale. Or which is what classified as held for sale. So when do we see that a portion of a business has been discontinued or there's a discontinued operation? So as held for sale, and which is, let me see, and which is a separate line of business So a separate line of business. So we have separated it. So that separate line of business can either be the operations, in terms of the operations, or in terms of location, in terms of what location. Then we can see that, or it is a part of a plan, to dispose, part of a plan to dispose of a separate, line of business. Or we can also see as where a subsidiary acquired a portion solely for purpose of what? For the purpose of resale. So this is what this continued operation means. So any component of the entity that has been sold or which is classified as held for sale and which is a separate line of business, that is the operation. In terms of operations, maybe we have the marketing division, we have the accounting division, or maybe when you take a manufacturing firm, we have where we package the product, and we have where they manufacture the actual product, right? So a portion can be what? Discontinued. You have maybe it can happen that one portion of the production line can be closed, can be discontinued, right? Or maybe you can see that you are into production of soap, and then let's say soap and pomade. It can happen that you disclose or you close the pomade section of your business, right? Or a part of a plan to dispose of a separate line of business. A subsidiary acquires solely for the purpose of what? Resale. When a subsidiary, I believe you know what a subsidiary is. That is like a branch of let's say KFC in UK. You have a branch here, so that is your subsidiary. So this is what we term as what? Discontinued operation. So at what are the conditions that would warrant us, or that would help us to classify an asset held for sale? At what point do we classify an asset as what? Held for sale? So conditions to classify an asset, as held for sale. For sale. Conditions to classify an asset as held for sale. So what are the conditions? One, so before you classify an asset, this asset is IFRS 5, that is you classifying it as held for sale, then these conditions must be present. What is the first condition? One, the asset should be available. So the asset is available. The asset is available for sale. The asset is available for sale immediately. Not that they are now doing some repairs, or they are now trying to make it look nice. It should be readily available for sale. You shouldn't now go and do something about it. So the asset is available for sale immediately in its present condition. In its what? Present condition. In its present condition. In its present condition. So this is one of the conditions that would help us classify an asset as held for sale, IFRS 5. So if you read a question and they say the asset is under repairs, where you see it's under repairs, how can the asset be under repairs whilst you are going to sell it? It should be readily available in its present condition before we can classify it as held for sale. Secondly, can say that it is highly probable. So the sale is highly probable. Let's say the sale is highly probable. The sale is highly probable. The sale is highly probable and is expected. It is expected and is expected. And it is expected to be completed. And it's expected to be completed within a year. And is expected to be completed within a year. And is expected to be completed within a year. So the sale is highly probable to occur, right? It is highly probable to occur. And that sale is highly expected. It is expected to be completed within a year. Not that you will sell next 2 years. If you will sell next 3 years, that doesn't give us a condition to classify it as an asset held for sale in this current financial statement. So that is the second condition. So before you classify, you make sure that all these conditions are available. So yes, the sale is what highly probable and is expected to be completed within a year. So except that maybe there's an approval, right? There's an approval, or like it is not approved by the relevant regulators, which is not management's fault, right? Which is not management's fault within a year. Let's say the sale must okay, but those authorities must verify the product to ensure that it is quality, it meets the standards. So as a result of that, it has extended to the following year, right? So you can see that situation is not management's fault. That situation is not management's fault. But if it is management's fault, then that is violating the condition to be classified as what held for sale. So that is for the point 2. The third point is management. Management is committed. Management is committed. Management is committed to the sale. Management is committed to the sale. What do we mean by that? It means they actually want to make the sale, right? They actually want to sell the asset. So they are committed with the word sale, that they are very doing everything possible to make the sale. So that is when we say they are committed to the sale, right? And then the fourth condition is that the operation or let's say the asset is being actively marketed. Actively what? Marketed. They are doing a lot of adverts. They are advertising the product. So we see that they really want to make their sale, right? So the operation or the asset is being actively what? Marketed. And then the fifth condition we can look at is what? That the asset is being offered for sale at a reasonable. The asset is being what? Is being offered. The asset is being offered for sale. Is being offered for sale at a reasonable price. At a reasonable price in relation at a reasonable price in relation to its current fair value. So that is basically its market value. So it shouldn't be more than, let me put in brackets, not more than the market value, but it can be less than the market value, not more than the fair value. So it shouldn't be more than, if the price of the asset that you are selling is more than the market value, how they say the amount that is being sold at the market, amount of the assets at the market. If what you are selling, the price that you are selling at is higher than the market value, then that violates the condition of it being classified as assets held for sale. Then can talk of the last one, which is that it is unlikely that you have a change of mind. So it is likely that the plan will change. Plan to sell the asset will change, right? So you are really committed. It is unlikely that the plan will change. It is unlikely that the plan will change. So these are the conditions to classify an asset held for sale. So if you get a question, these are the things that you'll be looking at. Read the question and check if the asset is available for sale, its present condition, if the sale is highly probable, and that it is expected within a year, except that it is not within management's control. And then the third point is if it falls, the sale is committed, management is committed to the sale, and then asset is being actively marketed. They are doing a lot of advertisement to sell the asset, and then the asset is being offered at a reasonable price. That is not above the current fair value price, and then it's unlikely that they will have a change of mind. So these are the conditions to classify an asset held for sale. Okay. All right. So now let's move on to the measurements What is the measurement criteria? What is the measurement criteria? Measurement criteria, right? Measurement criteria. So the assets or disposable group, the asset or disposable group, actually the asset that we are trying to dispose of. So the asset or disposable group, must be, the asset or disposable group must be measured at what? So what is the measurement criteria? What is the measurement criteria? Measurement criteria. So that is measured at the lower, of the carrying amount, and the fair value less cost to sell, So that is basically the net realizable value. So the net realizable value into brackets is a fair value less cost to sell. Fair value less cost to sell. Fair value less cost to sell. Right. So okay. So now this is the measurement criteria. So let us look at the things that IFRS doesn't apply to. The things that IFRS does not apply to. So IFRS does not apply. Any question? Do you have a question for me? IFRS 5 does not apply to certain assets. IFRS 5 does not apply to certain assets. Covered by other accounting standards. Like what are they? So IFRS 5 deferred tax assets, and that is IAS. That will be under income tax. Income tax. And then also we have assets arising from employee benefits. Assets arising from employee benefits. So if if you not ask, let me say this: if after 1 year and there is no potential buyer, then you have to reclassify the asset into a non-current asset held for sale. It may be you have done all this the conditions that I highlighted, advertised, but then there is no potential buyer. Then you would have to reclassify it to the normal PP or the non-current asset, to the normal non-current asset. Until you get a potential buyer, then that's why you can classify it as what? Non-current assets held for sale. Held for what? Sale. Thank you very much. So now, this assets, IFRS does not include the following assets that I'm talking about. Assets arising from employee benefits, that will be IAS, is it 19? 19, IAS 19. Then we can talk of financial assets, which will be under financial instruments. So IFRS 9. You might do all the standard next semester financial reporting too. Yes. Are we doing income tax this semester? Then investment properties, IAS 40 is also not. Investment properties, IAS 40. Those agricultural, biological, and many more. So, and many more, right? More. All right. So, I believe you know there is measured at one net realizable value, right? So that is fair value less cost to sell. So I believe you need the higher of the value you use, and then this is what the higher of, so the recoverable amount. The recoverable amount is what the higher of the what fair value less cost to sell, and then the value you use, right? Yes.
Yes.
So you know that. Okay. So what are some of the disclosures? How do we disclose? So we talked about the measurement. What are some of the disclosures? What are some of the disclosures? So in the period in which a non-current asset or disposable group has been classified as what? As an asset held for sale or sold, IFRS 5 says that the entity must disclose this held for sale, right? So IFRS says that it must what disclose. So what are some of the disclosures? So disclose about what? So there should be a description. There should be a description of the non-current assets, or the disposable group. Should be what? A description that an asset has been. Then there should also be a description of the fact and the circumstances, the fact and the circumstances of the sale, right? What are the circumstances of the sale? Circumstances of the sale or the expected sale of the sale or expected sale or the expected or sale. Then lastly we can talk that any impairment losses should be recognized. When do we get impairment? When do we get impairments? What is an impairment?
The current amount minus
is there what?
Amount. Is the carrying amount minus the recoverable amount?
Oh, okay. So the carrying amount minus what? The recoverable amount. So the recoverable amount is the higher of what?
The fair value and the entity specific value.
Okay. So the specific value is also known as what?
The value in.
Oh, okay. I see. Thank you very much. All right. So now let's take some examples and you see how it works. The main thing is for you to understand the concept. If you understand the concept, no matter how they frame the question, you should be able to do something and end your takes. I believe in accounting, you don't need to balance before you get an A. You don't need to balance before you get an A. It's about the concept and doing a lot of correct stuff, right? So recording a rightful transaction. So let me send this example. Let me share this example. I'm supposed to share it long time. Okay. All right. So okay, so sharing it to the group now. Someone is making noise at the background. Who is making noise at the background? Informa, you went for lectures, right? That is nice. Thank God you went for lectures. Informa, you went for lectures. Wow. This Sunday you went for lectures. I see.
Hopefully. Well, how do you know?
Okay, so I think I'll share the question. Let me get it here so that okay. Okay, so okay, so someone should let me share my screen now, so that someone can start reading.
I'm reading.
Okay.
S&D is preparing its financial statement for the year ended 31st December 2017. A. On 3rd December 2017, the entity became committed to a plan to sell a surplus office property and has already found a potential buyer. On 15th December 2017, a survey was carried out and it was discovered that the building had dried rot and substantial remedial work would be necessary. The buyer is prepared to wait for the work to be carried out, but the property will not be sold until the problem has been rectified. This is not expected to occur until summer 2018 required. Can the property be classified as held for sale?
Yes, can it be classified as held for sale? I share my screen. Hello, can you see my screen?
Yes,
Hello.
but it's small. Okay, yeah, it's okay. No, please, you can see.
Really? Can you see now?
Yes.
Okay. All right. So S&D is preparing its financial
So please, can you
statement.
zoom it?
Give me the question.
Yeah, the question. Okay.
Is it fine now?
Yeah, it's okay. It's okay.
Okay. All right. So on 1st December 2017, the entity became committed. So can you see committed, which is one of the conditions, right? Do you remember?
Yes.
All right. So committed to sell a surplus office property and has already found a potential buyer. Already found was a potential buyer. On 15th December 2017, a survey was carried out and it was discovered that the building had dry rot and substantial remedial work. Substantial remedial work would be necessary. The buyer is prepared to wait for the work to be carried out. but the property would not be sold until the problem has been rectified. This is not expected to occur until summer 2018. What is the requirement? The requirement is that can the property be classified as an asset held for sale? Yes, what do you think? Can it be classified as held for sale?
No.
Should it be classified?
No, please.
Why no? Why no, please? Yes, who else? Why no?
Please, I think that they are committed to sell the asset, but then it
Okay.
is not readily available for sale.
Okay. So can we classify it as an asset held for sale?
No.
All right. So illustration 1. So yes, we cannot classify it as an asset held for sale, even though they are committed to make the sale. But then we saw that the asset is what the building had dried rot and substantial remedial work would be necessary. Which of the conditions can we relate to this statement? Which of the conditions?
So the first one, you said the asset is available for sale immediately in its present condition.
Exactly. So because the asset is not available ready in its present condition, we cannot classify this an asset as what? As an asset held for sale. So we can see the IFRS states that, so you quote the law, you quote the IFRS, the standard. IFRS states that in order for an asset to be classified, state that in order for an asset, in order to classify an asset as held for sale, the property or asset, the property or the asset should be what? Should be available immediately, or should be available for immediate sale in its present condition. So we can see that the property would not be sold until the work has been carried out. This demonstrates that the facility is not what available for immediate sale. Therefore, the property cannot be classified as held for sale, right? For the property or asset should be available for sale. So let me write it. Because I'll be sharing the materials. So the property would not be sold. What did they say? The property would not be sold until until the work until the work until the work until the work has been what has been carried until the work has been carried the work has been carried out until the work has been carried, demonstrating that demonstrating that the facility is not available the facility is not available